Hey everyone, welcome back to a brand new episode by the Dutch Investors. Today we're doing something special. We're releasing our Adyen Deep Dive from December 2024, previously only available to our premium members. Adyen has delivered a roughly 14% CAGR since going public in 2019. It operates in one of the fastest growing industries on the planet, payments, with the potential for incredible profitability. We wanted to find out whether this Dutch fintech giant, operating right in our own backyard, could be that hidden gem we've been looking for. Adyen is the quiet force behind some of the biggest brands in the world, powering their payments, whether online, in-store, or across multiple channels. Now, Adyen is a company we know all too well. We own it, we've talked to employees, and we've been to multiple investor days. Our TDI analyst Bouke did an incredible job putting this deep dive together. Some of the financials might be a little outdated now, but most of the insights are timeless. If you like this episode and want access to our newest exclusive deep dives every 14 days, you can check out thedutchinvestors.com. And if you're on the fence, use code GIFT50 for a lifetime 50% discount on any plan. In this deep dive, we'll unpack what Adyen does, how it makes its money, what makes it so special, about its moat, and what risks might lie ahead. So sit back, grab a cup of coffee, and enjoy our full Adyen deep dive.
Yeah, so as you stated, we both have a position in Adyen. So before we begin, what were your initial thoughts about Adyen before this analysis?
Yeah, of course, because I do own the shares, I thought it was a great company. And I know, because I've been to 3 annual meetings, that the management is very good, in my opinion. They are very long-term thinking, make great capital allocation decisions. And it's, in my opinion, one of the only European tech companies that is executing really well.
All right, and why did you choose to analyze Adyen again? Because you have a position for a longer time, I guess?
Yes, and the previous analysis I did was, of course, payment network Visa. And I thought I can as well analyze payment service provider Adyen. I've already stated that it is a position of mine, and it's trading at the same price as a few years ago. So maybe the valuation is somewhat more attractive. Now they have seen growth, but the share price is still the same. And mostly I want to gain a deeper understanding of its competitive advantages and determine whether it's reasonably priced, despite its price to earnings ratio of 55 right now.
All right, that sounds interesting. And before every analysis, well, every one of us, I can say, reads an annual report, goes through the earnings calls, etc. But you also read a lot of interviews for this analysis. How so?
Yes, from the outside, Adyen's platform and competitive position is quite hard to grasp. So I had to get some information from people that know the company really well or worked with Adyen. So I read over 150 pages of industry experts, former employees, and customers of Adyen. And that way I got a lot of new and unique information. So that was very helpful to me.
All right, and now we had the introduction. Let's start with the history, which is not that long because Adyen was founded in 2006. And what can you tell us about that starting period?
As you know, Mathijs, Adyen means again or starting again in Surinamese, and was founded in 2006, as you said, by Pieter van der Does, who is still co-CEO, and Arnoud Schuijff, who left the company. Before 2006, van der Does and Schuijff started another company, Bibit, and this became one of Europe's biggest payment processors. And in 2004, it was acquired by the Royal Bank of Scotland, and later became WorldPay, a competitor of Adyen right now. A year after founding the company in 2007, Adyen processed its first transaction, and by 2010, it signed its first global merchant. Just a year later, in 2011, Adyen was already a profitable company. Now we go to 2013, and Adyen introduced that year Adyen Acquiring. And this helped them innovate quickly and attract more large customers like KLM, Vodafone, and SoundCloud. That same year, they became Facebook payment service provider. And that was a very big win that boosted both revenue and, of course, their credibility. In 2018, Adyen went public on the Amsterdam Stock Exchange, valued at around 7 billion at its IPO. It's quite funny because yesterday I was reading an article about this, and I read that the first day when they IPO'd, their stock increased over 100%.
Wow, that's crazy. That's a big success. I remember actually being in the car. I was sitting in the car and I heard it on the radio. And that was one of the moments, I think, that I realized maybe I should invest in stocks.
100% on one day. Of course, that is not durable for every day, but it's very interesting. And also, they didn't go to the IPO. There's a lot of discussion about that. Some people see it as arrogance, but they saw it just as another work day where they could build at the company instead of go to the stock exchange to ring the bell.
Yes. So why did they IPO then? Because I know one of their large competitors, Stripe, they are not a public company. So why did Adyen go public?
Yeah, that's a very good question because they didn't need the money. As I said, in 2011, they already were profitable, so they didn't need the money. I think it is because some shareholders just wanted to leave, and also if you are a publicly traded company, your credibility can be somewhat higher, somewhat better. So I think it is for those reasons.
All right.
I think I've said everything about the history of Adyen, and we can move to the business model. But Mathijs, of course, you also own shares and you also know quite a lot about the company. So if you have something to tell, if you think, Bouke, you missed something, please interrupt me and say what you have to say.
I will, no worries. So now we had the history. Let's start with the business model. So now you know more about the history of Adyen, which is quite short. Can you tell us more about how Adyen actually earns its revenue?
Yeah, this is where it gets really interesting. Yeah, Adyen is a payment processor, and what they basically do is they make it possible for businesses to accept payments like credit and debit card, but also local payment methods like Venmo in the United States or Ideal in the Netherlands. When you swipe your card, for example, the information goes to a payment network and some banks, so you can pay quickly and safely. PSPs, that is what a payment service provider stands for, help businesses accept payments and improve authorization rates. And Adyen uses a land and expand strategy. They start by offering a few products and processing a small portion of a customer's payments, and over time they build trust, increase wallet share, and add more products. And this strategy works. Right now, over 80% of Adyen's recent revenue growth comes from existing customers, and the churn rate is under 1%. So that are really great numbers.
Yeah, that's fantastic. And for the ones who do not know what an authorization rate is, in my eyes, it's the percentage of payments that is accepted, right?
Yes, that's right. If you have an authorization rate of 95%, basically out of 100 payments, 95 payments succeed and 5 payments fail. And that can be because of they detect fraud or they detect you have too less money on your card or whatever. Maybe the card is expired. That can all be reasons for a lower authorization rate.
Yeah. And because you also did the visa analysis recently, could you briefly explain the connection between Adyen and Visa?
Adyen stands on the acquiring side. So they stand, of course, not at the customer side, but at the merchant side of the payment. And the payment flows through Adyen, goes to Visa, to the issuing bank of the customer, and after that it flows back. The information or the money flows back through the payment network like Visa or MasterCard to Adyen and then to the acquiring bank. So that is basically, it's quite complex, but that's basically how that works.
Yeah, as you said, the industry is quite hard to grasp, but I think you explained it great in your analysis as well. So, for who is Adyen processes these payments? Can you name a few customers of Adyen?
Yes, of course. Adyen focuses on large enterprises. So unlike, for example, Stripe or Molly, which focus mostly on smaller businesses, Adyen's tech stack and sales team are designed for global giants. And their single platform handles all development and integrations. Adyen doesn't customize for individual customers. They only make changes if multiple customers need it. To stay close to their clients, Adyen has dozens of account managers who work with companies like, here they come, McDonald's, eBay, Booking, Uber, Microsoft, Amazon, IKEA, and Meta. So only the largest businesses are basically, clients of Adyen.
Yeah, so they do not make very tailor-made specific solutions for customers because they try to keep it as standardized as possible, right?
Yes, that's 100% true.
And do you think that Adyen is uniquely positioned to keep those customers? Like, what gives them an advantage over its competitors to keep companies like Microsoft or Booking on board?
Yes, Adyen stands out as a financial technology platform because it combines data from both in-store and online payments. And that is something most competitors can't do. And why? Unlike Adyen, most competitors aren't built on a single platform, making it harder to bundle and organize data efficiently. This leads to slower processes and more complexity. And Adyen also holds banking licenses in Europe, the United States, the United Kingdom, and for a few months even in India. They've never made an acquisition and opt to build the technologies in-house. And this allows them to iterate quickly and build the best solutions for the customers. And you see this with companies like Stripe or Braintree. They have acquired, even like Stripe, which is commonly known as the strongest competitor of Adyen. They've done maybe between 5 and 10 acquisitions, and all those technologies they have to integrate in-house, and that's basically slows them down when they want to innovate. So that is an advantage Adyen really has. One thing to add here is when your payment is processed through Adyen, they manage the entire payment stack. And this includes acting as the gateway, handling risk management, processing transactions, acquiring payments, and settling funds. Adyen earns fees for processing and settlement, and these are gateway and acquiring services, along with smaller fees for additional products and functionalities that simplify businesses' operations.
Yeah, so you talked about the speed and the efficiency of a payment. So, for example, when you are in a McDonald's and you place your order and you are willing to pay at the terminal, which is maybe placed by Adyen, software is from Adyen, can you know by the speed of the terminal if it's an Adyen or Stripe or maybe a legacy player that placed it?
Oh, that's a really hard question. I think there is no clear answer to that. Sometimes you see on the terminal like the green letters of Adyen above. It means, at least that's something I notice a lot when I walk to stores. I always look at that. But for example, by McDonald's, I don't see those green letters above, and I see that they have those Ingenico terminals. I'm not sure if you can see if Adyen processes these payments. Have you any idea, Mathijs?
No, I have no idea, but I was just thinking about there's such a big difference sometimes between different types of terminals.
Yeah.
So I thought maybe there's a difference that we as human beings can actually see in the real life. Maybe that's a complex thing. All right. So what does Adyen actually do? What processes are integrated in their single platform?
They offer various services, such as handling in-store payments with their own designed terminals, like the EMS1 or the SFO1. And they also, of course, process digital payments. And this unified approach lets merchants combine data from both channels, adding value and increasing switching costs. As of June 2024, Adyen had around 460,000 installed terminals, used by clients like Nike, L'Oreal, and Douglas. Another product that Adyen offers is Adyen for Platforms. And this is a key growth driver. It supports platforms like eBay, Uber, and Upwork by processing payments for both the platforms and their users. With the world increasingly moving to platforms, this product positions Adyen perfectly for the future. And this is also where they think most growth will come from in the future. I will talk more about this later. Adyen also offers capital, providing business loans to merchants, basically the business model of traditional banks. But at Adyen, repayments are made via fixed fees, but only if the merchant processes payments or uses Adyen cards, tying the service to the ecosystem.
And what is the advantage for a merchant to get a loan through Adyen instead of a bank?
Yeah, I don't think it's the yield that is lower at Adyen, but I think it's the speed at which they can get the loan. Like traditional banks, it can sometimes take weeks before you get the loan you ask for because they have to assess the risk, all slow systems, all slow processes. But at Adyen, you can just simply click a button and within, I think, 1 or 2 days, you get the loan. And that's great. That's an advantage for those merchants. This is actually a very small part of the total business of Adyen, but it's interesting to see where they are moving.
And is it growing a lot or?
Yeah, they don't give this information to shareholders, but I think it's growing.
And it might be hard to assess this industry and this company as an outsider, but how good are these products in comparison to, for example, Stripe, which I guess is their main competitor? Is there anything you can share about that?
Yeah, you're right. It's quite hard to assess this as an outsider, but I've looked at a report of the Forrester Wave, and they basically make assessments of Stripe, Adyen, and all those other payment service providers. And basically, Adyen and Stripe are the most complete, most innovative, and best PSPs out there. That is what they say in the written analysis. You also see a picture of where they stand compared to checkout.com and WorldPay, for example. But they also price premium. And this is something we will talk about soon because, payments of Adyen and Stripe are just more expensive than payments of like a Worldline or Chase Payment Tech.
Yeah, and can you make this a bit more concrete? So what impact does this have on customers? What does it bring them?
On the Investor Day of 2023, Adyen highlighted Burberry as a great example. And Burberry went from using over 20 PSPs to just one. And that is, of course, Adyen. And this reduced their contracts from 94 to 12 contracts. And this, of course, significantly is cutting down the workload for their payments team. So you can expect all those large merchants, global enterprises, they have a payments team where they look at the authorization rates, the cost of payments, and basically handling all those payments. And the less contracts you have, the more simple a payment is. Of course, the workload for the payments team, and maybe even you can fire some employees. The costs go down, and this showcases one of Adyen's key strengths. They are lowering the total cost of ownership for the customers. From an outsider's perspective, this is really hard to validate, but this is what they constantly say. They are lowering the total cost of ownership for their customers.
Yes, and I think Burberry can be a perfect example of combining the physical world with the online world, right? Because they have many stores as well. It would be a big mess with 20 PSPs, I think.
Yeah, they needed it.
Yeah, they needed it. So let's talk about the costs. Adyen is known as a payment service provider that has a premium price. Is this justified, do you think, or do you think they should lower it maybe?
Yeah, merchants take several things into consideration when choosing their payment service providers.
So you said they use multiple payment service providers?
Yes, nearly all big companies have a handful or sometimes even more payment service providers. Amazon, for example, has even 50 payment service providers worldwide. And Booking has also like 8 or something. And this gives the merchant, of course, leverage for pricing discussions and as a backup when a payment service provider isn't working. You are just not that reliable on a single payment service provider when you have multiple. And this way, risks are eliminated.
Yeah, still, but I get it when you have like 2 or 3 or maybe 4 providers, but 50, isn't that unneeded?
Yeah, maybe, but I think Amazon, they operate in so many countries. So I think they also have some local or regional payment service providers for, just a single country or something like that.
Yeah. All right. Thanks for explaining. So you talked about the pricing of Adyen. Except pricing, what are merchants taking into account when choosing a PSP?
Yeah, I think they take into account a couple of things. Let's start off with the authorization rate. Yeah, basically the number of successful transactions. It's very important, of course. The number of payment methods, and Adyen has like 100 payment methods, and I've compared it to Stripe, the information I have from the site, and Stripe has like 50. So Adyen has some kind of advantage here. The data insights a payment service provider can provide, and if it has a trusted name by complying with regulatory requirements and compliance. So that is also quite important. And about the price of Adyen, the cost of merchants using Adyen varies widely, making it tricky to compare directly with competitors like Stripe. However, with some help, I uncovered some details about this. Adyen typically charges just 11 to 13 cents per transaction, with additional fees for payment methods like Discover, Visa, or MasterCard. Dus in my opinion, they basically have a cost plus pricing model. So you have the fees of Visa or MasterCard, and on top of that, you pay just 11 to 30 cents to Adyen. This reminds me a little bit of Hilton Food Group, another company I've analyzed. But compared to Stripe's online payment fees, Adyen is often cheaper. Stripe generally adds 30 cents per transaction. Though it's possible, Stripe negotiates lower rates with large merchants. And about Stripe, in their 2023 annual letter, Stripe mentioned they have now over 100 customers processing more than 1 billion annually through the Stripe platform. So this highlights the strength with the high volume customers also Stripe has.
Yeah, so they are known for acquiring mostly smaller businesses. This is actually the proof that they also doing very good with large clients.
Yeah, exactly. So this is something to really keep an eye on, and it's kind of surprised me when I read that. If you are interested in Adyen, it's very good to also read the annual letters of Stripe, I think, because they are really strong competitors.
Is it also the way around, by the way, that Adyen also has a lot of smaller companies? Because I remember when we started the Dutch Investors that we tried to search for a PSP, and at the end we ended up with Stripe.
This is a funny story actually, because I'm a kind of fan of Adyen, the business, and so we mailed them like, we're gonna start a company. We do it like this, and we want you as a payment service provider. And they didn't respond for, I think, like 3 months. And after 3 months, we got a really polite mail from the sales team, and they said, "I'm sorry, guys, but we are actually not the right payment service provider for you. You are too small. Maybe come back in 5 years or something like that when you are bigger and sell to more countries." But that's funny.
Yeah.
And to come back to your question, they are moving to smaller and smaller businesses, but they do it in another way than Stripe. Stripe goes directly to the smaller businesses. They kind of acquire them directly, and Adyen does it through their platforms business. So when you use a platform like that uses Adyen, maybe your transactions are processed via Adyen, and that is basically it's another way that Adyen chooses to get those small to medium-sized businesses. But Adyen, they have tried to acquire them directly like Stripe does, but they failed, and they acknowledge this. So that's good to know, I think.
Yeah. I think we have been talking quite a lot about the business model now. So let's end with the segmentation of the revenues. Can you take us through?
Yes. Adyen talks in 3 key commercial pillars. And this is digital. Adyen powers digital payments for clients like Netflix and Spotify. And the focus here is on offering preferred payment methods. and keeping transaction costs low and maintaining those high authorization rates. And this pillar accounts for around 60% of Adyen's payment volume. Then we have unified commerce. And listen carefully, Mathijs, because I want to test this in a few minutes with you. Then you have unified commerce for businesses with both online and physical stores. And Adyen provides advanced point of sales terminals and strong data collection. And this supports companies like Nike, Levi's, Burberry, and Prada. Around 25% of Adyen's payments volume come from this pillar. Then we have platforms, and platforms are like Uber, Olo, Vinted, and Etsy. And they use Adyen specialized solution. And this smallest but fastest growing pillar is currently making up around 15% of Adyen's total payment volume. And Mathijs, I want to test this with you. Maybe you can name a random company and then I have to assess in which commercial pillar they are segmented.
All right, then I'm going to start with the company that I mentioned earlier to you. So let's say, take Meta.
Meta. So Meta, I think it's a platform because they have also other businesses on the platform to who they pay. So this is a platform business.
All right. Let's say Amazon.
Also, Amazon has other businesses on its platform. So as we know, as shareholders, I think Amazon is moving more and more to a platform business. So also platforms.
What about Amazon Prime, like the payments consumers make to Amazon directly without third parties?
Yeah, that's a good one. That's a digital transaction.
Right. Let's name one easy one. Interesting one maybe. Let's say Domino's Pizza.
Domino's Pizzas is also a customer of Adyen, and they are as well in store as they are online. So this is a unified commerce business. So maybe now you have a better understanding like how they segmentate this. And Adyen doesn't disclose revenue breakdowns for its commercial pillars, but just the percentage of volumes. And around 80% of their revenues come from settlement fees and processing fees. And basically as the volume grows, also the settlement fees and processing fees grow. So nothing special here.
All right. Then there's also the culture of Adyen. They're known for having a very strong entrepreneurial culture, led by their current CEO and founder. Can you tell us something more about that?
Yeah, Adyen's culture is defined by the Adyen formula. And this is a set of guiding principles shaping everything they do. Also unique is that every engineer has to spend time with merchants annually to understand their product's impact. So this is quite unique and I think also quite great. Adyen also has a high talent bar with final interviews conducted by top management, ensuring only the best one fits. And beyond business, also Adyen want to make an impact on the world. They do that through Adyen's Giving. And this is an initiative that processed 7.7 million donations in 2023 with zero fees. So they basically ensure 100% of the funds reach the non-profit organizations. So that is really great, I think.
And it's crazy that they still, even though they are becoming very big now, that still every final interview for an applicant is being conducted by the top management of the company.
Yeah, that is true. That's great, right? If you are an engineer or top talent, it's unique that you can talk in your in your final interview with an top manager like the co-CEO Pieter van der Does. So that is awesome.
All right. Now we've had the business model. Let's go to the sector and industry. So now we can finally delve some deeper into the differences between Adyen and other service providers. Can you share what you found about the payment processing market in general and its industry?
Yes, the PSP market is around 50 to 70 billion big, and the market is expected to grow with roughly 10% per year. And this is driven by more cashless transactions and a higher smartphone penetration. But my personal view is that Adyen can go faster than this, so they take market share. And they can even increase the total addressable market for the PSP market by offering extra and innovative services like what I already told you, embedded finance. Adyen has noted several times at their earnings calls that they still have single-digit market share, so there's a lot of room to grow for them.
And who are Adyen's main competitors? We mentioned Stripe before. Can you tell us something more about it?
I think Adyen's main competitors are Stripe and Braintree, maybe Chase Payment Tech as well. But there are many other in the payment processing market, like I already mentioned, maybe even 50, like Amazon has 50 PSPs. And most competitors are built on legacy systems, which have drawbacks like higher cost or slower processing, limited functionality. For example, Chase Payment Tech, this is a really big legacy player, focuses on simpler payments and offering fewer payment methods compared to Adyen. While Chase is fine for the US-only businesses, Adyen is a better option for the global companies with local payment needs. And Worldline is another big payment service provider who have acquired 33 companies and had to integrate all those systems into one. And the result is a system that works, but is connected with duct tape. And this results in slower processes, barely any updates and very little innovation. Then we have Checkout, another legacy competitor that doesn't offer point-of-sale terminals. And basically all legacy PSPs come with drawdowns, but are cheaper than, for example, Adyen or Stripe.
So what if you were a supermarket from the USA? Let's say Target, which I think solely operates in the US. Then Chase Payment Tax might be a good solution, right? Because maybe people only pay with credit cards there. They do not need to integrate international sales.
Yeah, you are completely right. For those kind of simpler payments, a legacy PSP like Chase Payment Tech is pretty good for them.
All right. Do you have an example where legacy competitors had issues with their systems?
Yeah, it's funny because when I was researching Adyen, I stumbled upon a news article, and that news article said Worldline says payment services back to normal after major disruption in Italy. So during the Black Friday season, their services didn't work, and can you imagine how frustrated that those businesses were that process payments to Worldline and they miss a lot of revenue? That's really a ramp, I think.
That would have cost them a lot of money.
Yeah, so that is why, maybe sometimes you want to pay more for a better PSP.
Yeah, in the meantime, Adyen had like 99.99999% authorization rates, right? Or uptime.
Uptime, exactly.
Uptime, yeah.
So they did a very good job, but Worldline failed the test, I think, for Black Friday. So that is painful for those merchants.
Yep.
And like you said with your example from a Target, there's no one size fits all in the PSP market. Small businesses might prefer Stripe or Square, while larger companies might choose Braintree. And for global enterprises with an omni-channel project, maybe Adyen is the better fit. So that is something I learned by reading all those interviews. There is no one size fits all in the PSP market. It's quite fragmented, and I think it will be for quite some time.
Yeah, with all the differences in this market, do you think it will ever consolidate?
Yes, I think, but only to a certain extent. I think there will always be room for legacy payment service providers, because of their lower costs. So they can be quite attractive for simpler payments. And that was something I didn't expect when I started this analysis. I thought Adyen and Stripe would push all the legacy providers out of the market, but now I don't think this is true anymore. Although they certainly win wallets and market share over those competitors.
Yeah, maybe at the final end, let's say in 10 years, when they reach a very high scale and they might be able to offer lower rates to clients. Is that a possibility?
Yeah, but it's not this strategy that Adyen has right now, and I'm not sure if they will ever do that to win. Yeah, to push those competitors out of the market. They price premium. They have a premium product, so that's basically how they operate.
All right. So then, as an Adyen shareholder, you have to hope for a continuing globalization, right?
Yeah, that would be great because that means more complex payments, and yeah, more complex payments are where Adyen is very good in. So that would be great for Adyen.
Okay. So let's zoom in a final time on their competitor Stripe. What are the similarities or big differences?
Yeah, I will name a couple. In the written analysis, I've made a table of this, and one thing that stood out to me was a notable difference is that the number of countries where payments are accepted, I found out that it was roughly 100 at Adyen and only about 50 for Stripe. So Adyen is really a global player, and Stripe more in the in also a lot of markets, but just less. Payment methods offered by Adyen, what I can find on the site, were also around 100, and at Stripe they were 60. So also a difference here. The take rate for Adyen is very low, 0.2%. So when you have a payment of $100, only 20 cents of that goes to basically Adyen. And the take rate for Stripe is quite high actually, and this is around 1%. And Mathijs, do you have any idea how so?
Yeah, I think that's still because of the big difference between the size of customers. So Adyen has very large enterprises who can negotiate better prices, and Stripe is in with many more small companies, medium-sized companies.
Yeah, that's right. That's right. I knew it, but I wanted to test you, and you succeeded. Yeah, smaller companies though just don't have bargaining power, and they have to accept the higher take rate, and that is what those global giants, they certainly have bargaining power with multiple PSPs, and also the onboarding process at Adyen is quite hard. As we know, we couldn't be a customer of Adyen, but we can easily be a customer of Stripe. And also Adyen has 3, maybe even 4 banking licenses right now, and Stripe doesn't have any banking licenses.
Looking at this table, it seems like an easy choice as a big company. If you look at the number of countries available, payment methods, take rate, Adyen scores better in every variable. So
yeah, but for, like I said, if you are only operating as a company in the US and in Canada and in the Netherlands, I think Stripe is also fine here. And I think you can negotiate if you are a bigger company, also better take rates at Stripe. So,
all right, I think that's it for the industry. Let's move on to the competitive advantage.
Yes, the competitive advantage. And let me be quite straight here. I don't think Adyen has a durable competitive advantage because they don't benefit from network effects, high switching costs, patents, and a strong brand, or significant skill advantages. I don't think they have a durable competitive advantage. But what they do have is a superior process and a long-term focus. Adyen works very closely with their customers, building relationships over time. But is that enough to create a sustainable moat? I'm not convinced. As you certainly know, Mathijs, in 2022-2023, Braintree challenged the whole payment service market, and certainly also Adyen, with extremely low pricing, especially in America. And despite this, Adyen wasn't significantly impacted. And I'm sure Adyen did lose some wallet share of customers to Braintree, but customers just didn't leave, and the prices of Braintree were so low that this was not sustainable. And now you see they are also asking higher prices, and you see Adyen taking wallet share again. So this shows me some resilience, but it doesn't necessarily indicate a lasting edge, in my opinion. What do you think about the mode of Adyen, Mathijs?
I think it's not impossible to overtake Adyen, but I think it's very difficult for companies to be better than Adyen. That's my view of it. I think the facts speak for itself. Adyen is consistently growing faster than competitors, realizing very high margins as well. And I think that says something about their durability. But as I said, it's not impossible to at a certain time overtake them. But it will be very hard, and it will take a lot of investments for companies to do it.
Yeah. Maybe now we are talking about this, maybe you can also see it coming as an investor. Like you see that PSP is building into more countries, accepting more payment methods, and there will certainly be written about this. So maybe you can see it coming. I agree with you that it's quite hard, but I don't really see a mode. Also, after reading all those interviews, I think that customers are looking at prices very hard. So
it's difficult to gain wallet share from solely US operating companies. That's where I agree with. I think they do not really have an edge compared to a GP Chase Tech in the US, solely the US. But if I look at your attached article from Worldline, for example, we're trying to connect more than 30 companies into one, then I think Adyen will take a lot of market share from them in the future, as well as was Stripe, I guess.
yeah, I really hope so, because you are a shareholder and I'm still a shareholder. But I think the growth will slow down, because those legacy providers, they will exist, in my opinion. After reading those articles, I think there will be a lot of room for those legacy PSPs because of their lower pricing. So that's something I'm a little bit worried about, actually.
Yeah, and also don't forget the fact that more and more payments are coming through online, and that's where also more payment solutions are possible for merchants to give to their clients. So I think that's a big tailwind for Adyen. So you have that growth that comes from just like globalization growth, online growth, and you have Adyen taking market share. So it's like some sort of dual engine. Do you see it the same way, or?
Yeah, they certainly have tailwinds, but when we talk about the mode, I think it's actually not that strong. Like Molly here in the Netherlands, also a Dutch company, they have also a single platform. They have also never done an acquisition, so I think they can catch up with Adyen. I think if Adyen doesn't innovate, they are not worth their premium price. And of course, Molly is focuses on a different market, more small to medium-sized businesses. But it's software. I think it is possible they built what Adyen has built.
Do you think that culture could be it's definitely an advantage, but could it be a competitive advantage?
I think it's not strong. Yeah, I think culture is never strong enough to be a sustainable, durable advantage. No, I think it's certainly an advantage. Like they never do an acquisition, and because of that, their system they can innovate faster. But like I said, other companies can also do that. Molly actually also does that. Never does an acquisition, and with enough engineers, they can catch up, I think. So that's not a mode.
All right, let's see what happens in the coming years. I'm very curious, and we will follow it with huge interest.
Yeah. Adyen has high barriers to entry. Like you said, it's very hard to match their offering. But when you look at their digital segment, that is becoming more and more a commodity. Their digital segment, where 60% of their revenues come from, like simple online payments. and it quite worries me that Adyen has so much revenues coming from the digital segment, and the unified commerce and platforms, they have higher switching costs. So if that would change, I think their mode would be stronger. But with all those point of sale terminals, upfront investment, but right now it's not very, very strong, I think.
But I still don't get then why it's possible for Adyen to realize 40+% net margins.
That's a good note, Mathijs. But I think it's some kind of inherent to their business model, just like Visa or MasterCard. Just when you have enough skill, your margins will increase significantly. And when you compare that to competitors like Braintree and Stripe, they are barely profitable. So Adyen is certainly way more efficient. But I think if those companies reach a certain scale, process more payments, and they can also get those high margins. But Adyen is certainly way leaner, don't hire as quick as those other companies. But
if you say that Stripe and Braintree are not profitable, then the difference is even bigger. To me, it's an indication that merchants cannot get around Adyen because they can basically win 40% by moving otherwise. So that's an interesting point, I think.
Yeah, I think Adyen is certainly the best solutions for a lot of global merchants. But I think it also has to do with just how Adyen operates. Like, they don't overhire, they take in everything such a long-term view, and also by not acquiring those companies, your processes will be way more efficient. So you also in that you don't need more employees. So there are a lot of small benefits that come from the long-term vision, which is culture, I think. But
yes, I think we are done with the mode, right? Or do you have something to add?
No, I think we can move over to the management.
So Piet van der Does is co-founder and co-CEO of Adyen. You have watched and read a lot of interviews from him. What do you think about him?
Yeah, I think he's a really, really great guy. He's very humble, and he's not a technical guy, more a commercial guy. And when you watch interviews with him, he's not in a lot of podcasts, but listen to podcasts of him, you certainly can get a grasp what kind of person he is, and he's great. And most of the time he focuses actually on tasks like selecting training programs for Adyen employees and conducting final interviews. And that is something you don't see that often with a co-CEO position that is doing that. He's just very focused on the culture of Adyen.
No, you don't see that very often.
No, indeed. And all those operational tasks, he just outsourced to Ingo Uitenhage, who is also co-CEO, or Ethan Tandowski, who is CFO. Adyen takes hiring very seriously, so they don't overhire. And in 2022, 2023, when all those tech companies were laying off employees, they actually hire a lot of employees.
Yeah, and investors didn't like that.
And the investors didn't like that, no. Of course, this has impact on your net margins, and but we have to see if those investment in employees are going to work out. What do you think?
If it was a good decision, you mean?
Yes.
Difficult. I think it underscores their long-term view, because they are always taking the long-term view with everything they say. That's also why they didn't publish. I think they didn't publish quarterly results, right? Before.
That's right.
And now they are doing so because of shareholder pressure, but they did not care about the next quarter or the next year. They care about the next 5, 10, 20 years. That's what I like about them. Everyone was firing people, and Adyen was just hiring people if they could find very good and suitable employees.
Yeah. There has to be a strong fit to the Adyen culture and to, of course, what they need as in you as an employee. And Pieter van der Does has a Glassdoor approval rate of 88%, which is quite high. And I think, he's very respected also in the industry. Also at employees of Adyen, he's very respected, just as Ingo Uitdagen, the other co-CEO. And I'm going to tell you a funny story, because in recent years, Van der Does has reduced his shareholding in Adyen by selling shares regardless of the price. And when I was at the annual meeting, I asked him personally, why he sold all those shares. You have a long-term view, right? You have trust in the company, right? So also in the share price. Why do you sell those shares? And he responded, it was something like, most of my wealth is in Adyen stock, and I think it's smart to diversify my personal assets. Of course, I can understand it, but I'm not sure if this has anything to do. But when the share price dropped, he stopped selling shares, and now he also doesn't buy shares, but he has around 1,500 times his base salary in shares. So he there's more than enough skin in the game.
Yeah, that's definitely more than enough. And what about the other co-CEO?
That's Ingo Uitdagen. He joined Adyen in 2011 as Chief Financial Officer. And before joining Adyen, he worked at several financial and board jobs at companies like KPN. That's a Dutch telecommunication network. And in 2023, he got promoted to co-CEO. And following the fintech magazine, the choice has to do with the health of Pieter van der Does. That seems to be decreasing or not going as well, the health of Van der Does. And Uitdagen seems like a very competent leader for Adyen. How he comes across in interviews, it's great. And he also has a long-term vision, like Van der Does. And he holds over 500 times his base salary in shares. So these are phenomenal figures.
Yeah, both enough skin in the game.
Mm-hmm.
And do you also want to talk about the CFO, Ivan Tandowski?
Yeah, Tandowski, also a great guy. I talked to him at the last annual meeting, and he is a very cool and smart guy. And he also seems to breathe the Adyen culture, just like very long-term thinking, very integral. He comes across. So he worked for Adyen since 2017, and I've read in interviews that Adyen might be very happy to keep him on board because, he's a very talented guy. So Adyen did a great job holding him on board. He has very few shares, but now he is appointed to Chief Financial Officer. I think this will increase the coming years significantly.
Yeah. The two co-CEOs have a big share position, which might be an incentive in itself, but what are the other incentives for the management team?
Yeah, it's a comparison between peers in the payment and financial industry and in the high-tech and listed AEX index. The AEX index is the Dutch index. They also have a fixed remuneration in the form of cash and equity. They have a variable remuneration in the form of equity and, since short, a new hire policy. And this is the possibility of granting a sign-on award in cash or equity instruments to external hires. So the new hire policy enables Adyen to recruit the best talent available. And when I read the remuneration report, it was so funny because they said, like, we aim for a total remuneration of management board members to not be positions above the median of the peer group. So they basically say, like, we want to give less to the management board. Where do you read that? I've never read that, to be honest. So
no, me neither. I think this is the first time that I hear something like this.
Yeah, and also this sentence, also from the remuneration report. We deeply believe in treating our management board members the same as other employees. Therefore, we offer them pension and benefits arrangements in line with typical market practice and in accordance with what we offer our wider workforce. So there's not a big difference between the management board and the employees, which I think it's great for the culture at Adyen. And we can also see that the CEO and other management board members earned only 7 times as much as an average employee. And for your comparison, at the most other companies, this ratio stands at least 20 times. So I think, the culture of Adyen also in this part is great.
Yeah, so the gap between the management and the overall employees is relatively low at Adyen.
Yeah.
Which also fits in the culture, I think. I think the lines are very short within the organization. It's a very flat one.
Yes.
So I think it's more in line with everything. Okay, since Adyen has a lot to do with numbers when they are processing money, let's talk about finances.
Yes, and let's start off with the capital allocation of Adyen. For now, Adyen chooses to reinvest all available funds back into the business or to strengthen their balance sheet. And as of H1 2024, Adyen's balance sheets consist mainly of cash and equivalents, around 8.7 billion. And approximately 6 billion needs to be repaid to merchants or schemes. And that means that not all of Adyen cash and equivalents are truly their own. And the management said they chooses to strengthen the balance sheet because this makes regulatory issues and gaining banking licenses easier. The cash pile is growing and growing, and at some point it has to be distributed to shareholders. And this is exactly what I expect them to do. They have a debt-free balance, but they basically has some kind of float, like they earn money earlier than they have to pay it, so they also earn a lot of interest. And the main investment Adyen can make is in new employees. And last year they invested heavily in new employees. And like I told you, this is pressure on the margins. This is putting pressure on the margins. And now they lowered their hiring pace. And we expect operational leverage will kick in 2025, for example. And something we love very much is that Adyen has very few stock-based compensation, only about 1.5% of net revenue. So that is really great. But I think this will increase in the future because they are moving more to America, and there they employees demand higher stock-based compensation.
Yeah, and that might be a natural advantage compared to Braintree and Stripe, because I think those US-based companies, you have to pay the employees like twice or maybe 3 times as much of a salary than here in the Netherlands.
Yeah. And if you're only gonna work at Adyen for the money, you are just not a good fit. So that's something that's really great.
Yeah,
indeed, some kind of natural advantage.
Yeah. What are the key financial numbers you are looking for with Adyen?
Of course, net revenues. And over the past few years, this grew from 500 million in 2019 to 1,630 million in 2023. So really exploded. This implies a CAGR of around 34%. And there is one thing to remember. I don't think this kind of growth is likely to happen again in the future, because the low-hanging fruit, like the big global merchants, most of them are already onboarded at Adyen. So I think 20 to 25% growth rate seems more reasonable to me. And I would also focus on volumes, because this implies the market share they are taking. And also, Stripe in their annual letter is also talking about volumes, so you can compare both.
What about the net margins for Adyen? I think we spoke briefly about it during the mode. How is it developing?
Yeah, net margins. Yeah, they hired a lot of employees, putting pressure on the margins, and they still have a net margin of 43% in 2023. So that's really extraordinary.
Yeah. Don't see that often.
Exactly. So that's actually very great. And they stated that the investment in personnel will convert to more profits in the coming years. And I think in 2025 and later, it's very likely Adyen has profit margins of maybe even 50%. So that is just another league compared to most other companies.
But that, I think you said that the market is likely to commoditize more in the future, right? but they still can realize higher net margins.
Yeah, and I will tell you why. Because each dollar or euro coming in is just very high margin. So you have to look at net revenues. If net revenues is growing, so basically the money they earn from their merchants, then the net margin is also gonna grow. So it's not like a physical product where you have a lot of costs involved. Basically, if the net revenues are growing, there really aren't a lot of fixed cost. The net margin will grow, and I think that's exactly how this is gonna play out.
Yeah, so at a certain point in time, every extra dollar is an extra dollar of profit.
Yeah, if they reach a scale of maybe 100 trillion of volumes, that's like 100x, then that's gonna happen. Yeah.
Yeah.
You also see that at Visa right now, right? Those margins, and at Mastercard, those margins are incredible high. They also don't have a lot of costs.
All right. Yeah, so the costs are very fixed, and if you reach a certain stage, then every dollar of extra revenue is basically extra profit.
Yes, and they have a tiered pricing model. So when the volumes are increasing at a merchant, the take rate will be lower, but this doesn't affect margin. It does affect revenues. So here also you see, the revenue will grow slower, but the net margin will be even higher. You understand?
Yep, I do.
Okay, great. And of the net income, around 40% of the net income is interest income. That is huge. They also have a lot of cash on their balance sheet, so that is they store it at the Central Bank of Europe, as in other banks as well, to get interest income.
Yeah, it's so great that they can use the money that's being paid to collect interest from banks, especially with their banking license. It allows them to even get higher interest rates, and that's a very positive point.
Yes, that's right.
And what are the financial targets from Adyen?
Yeah, they stated this at the Investor Day. Net revenue growth between 20 and 29%. EBITDA margins to levels above 50%, and EBITDA and net margins are basically the same because they don't have a lot of depreciation and amortization, and do earn a lot of interest. And the capex expenditure of 5% of net revenues. So I think they will succeed in all of this.
Would you miss something in these targets, or do you think it's complete?
No, I think it's great. Do you miss something, Mathijs?
No, I was just asking. All right. So let's start with the risks and opportunities. What do you think are the main risks for Adyen?
Yeah, this would really be a horror scenario when a non-legacy competitor like Stripe are decreasing prices. I've read in an interview that Braintree, that lowered their pricing, is actually a legacy player, and Stripe is not a legacy player. If they are going to decrease prices at those large merchants, I think Adyen has to come down as well. So if they don't do that, they lose wallet share and eventually customers. So this is especially true for the digital pillar, where roughly 60% of volume come from. So this is something to really keep an eye on. I'm not sure how big the chance is that this happens, because I think this is not what Stripe wants, and certainly not what Adyen wants. But if they're gonna fight for market share, this can happen.
Yeah, but is this also a risk that can break Adyen as an investment?
Yeah, I think Adyen would win this price war because they have way lower costs. They are way more profitable right now. But this could break an investment because the valuation wouldn't fit anymore if this happens.
Yeah.
Yeah, and a data breach or a hack or something like that could be disastrous, because if that happens, a competitor like Stripe could say, we are more trustworthy and more safe. The data breach of 2024, 2025. Now, you can lose customer deals on that. So
yeah. It's also, I'm just thinking of it now, is the blockchain risk for Adyen?
No, I don't think so. I don't think it's gonna happen, to be honest. But if Bitcoin is gonna be a payment method, they can integrate it in their platform. So it's more it's more a risk for Visa or Mastercard for the payment networks than for Adyen.
Okay, good to know. On the other hand, what can make Adyen perform better than we would expect now?
Yeah, I think there are a few very big opportunities. So a lot of tailwinds for Adyen. For example, when the platform business is going to take off, and right now, this is just a small percentage of overall revenues, but I think this gonna increase. Yeah, they attract a lot of customers, like eBay, Doctolib, GoFundMe, Wix, all platforms, and the integration process for platforms are higher, more switching costs. So this is very interesting. Also, when they are going to disrupt legacy players, this is something I don't expect, but could be a big chance. When these traditional banks and more legacy providers are gaining less volume, that means basically less profit, and perhaps they can eventually go bankrupt. And this is something we see at Worldline, for example, that is barely growing and is barely profitable, innovates slowly. Yeah, I think Adyen can push a player like that out of the market because they aren't profitable, like Chase Payment Tech in the United States. They are profitable. And on the other side, there's Adyen, very profitable, fast growing and innovating. So that makes it an easy choice for merchants. I will name one more and then I stop this very positive story. I think embedded finance is following Adyen a 185 billion opportunity, largely untapped by platforms. And if this service can succeed, the merchant gets more profit, and also Adyen is very focused on this, and they will also profit from this financially. So great.
And maybe also to add one last one, maybe you can add something about it, but is Adyen also some sort of like spawner stock? I mean, Google has many initiatives. People are they like their own entrepreneurs within Google? I think Adyen has a similar culture where there are also teams working on future projects. So would this be an opportunity for Adyen?
Yeah, I don't want to be harsh here, Mathijs, but I think a big no for this. Adyen states quite clearly that they are not an Apple or a very innovative company like creating new products their own and see if it works. No, Adyen listens just to what customers need and they build that, and they constantly do that. And it's not gonna be like they launching new product, and the customers think like, what is this? I didn't ask for this. So
okay.
It's not like Apple or Google or something, or like Nvidia. No.
So Adyen is purely focused on their clients and the current offerings to improve that.
Yes.
All right. So now I'm very curious. Let's go to the valuation.
The valuation, of course, very important because I think Adyen is a strong enough company to own, but there has to be a good expected return. I expect for the coming 5 years a growth of 20% per year of net revenues. After that, 5 years of 15% growth could be are quite reasonable. I think they have a profit margin in year 10 of 50% and an exit multiple of 25. And with this input at a price of 1,500, the current stock price, you get a CAGR of 9.4% per year, including that I expect a decrease in shares outstanding or a dividend. So
it sounds like a doable scenario. I think it's still hard for a company to grow this fast for 10 years straight. But I think it definitely would be possible for Adyen.
Yeah, like growing faster than 15% a year for 10 years straight is is very hard, but I think there will be some years where they grow like 25%, maybe even, that they accelerate the current growth, but also some years when they grow slower because a recession or something is quite harsh for Adyen.
So they're almost a 100 billion company in 2034?
Yes, exactly. At the end of 2034, it will be a 100 billion company. And I think, when they focus on decreasing the cost of payments for merchant, they can ask maybe even higher price. So it would be a big opportunity, something investors also don't expect right now, if that take rate can increase, if they lower the cost of payments for merchants. But this is just a speculation. I'm not sure if they're gonna do this, but
yeah.
Yeah.
All right, let's wrap it up with the conclusion. I'm very curious, what are you going to do with your position?
Yeah. Okay. I will wrap it up. So a 9% CAGR isn't bad for a super business, but here's the take. I think Adyen is a fantastic company and an exceptional employer, but I have doubts whether it's a great investment. And this all has to do with their durable competitive advantage, which I think is lacking. I think competitors can catch up if Adyen doesn't continue to innovate, and there's a risk for a price war. If Adyen has to lower prices significantly, my entire valuation and investment thesis could be thrown out of the window. And with this level of uncertainty, I think I demand a higher expected return. 9% is for me just not enough. And that said, I admire the company. I love the product they're building. The management focus is very great. They have substantial skin in the game, and I even feel personally attached to Adyen because I've been to several annual meetings. While it lacks a clear competitive advantage, Adyen is operationally superior, expanding brick by brick into new regions like India and exploring markets like embedded finance. And I think this secular growth trend is also, undeniable. And despite its high valuation, a PE of more than 50, the combination of strong growth and operational leverage could make it an attractive opportunity right now. For now, though, I've decided to trim my position by 33% due to the absence of a durable competitive advantage. And after the trim, Adyen will make up about 5% of my portfolio. And if the market overreacts like it did in 2023 with the big drop of around 50%, I wouldn't rule out that I will add to my position again. But for now, I prefer a more cautious allocation. That is basically my take. I think the moat is lacking and the valuation isn't priced for that. But I'm also curious, what are you thinking, Mathijs, after my somewhat negative story about Adyen as a shareholder?
Yeah, I definitely didn't expect this analysis to turn up like this at the end. But it gave me some new insights. For example, I thought that Adyen would kick out all of their legacy competitors at the end. But after reading your analysis, I realized that this will probably never be possible because some companies do not need the product that Adyen offers them. I have a position of Adyen of around 5.5% of my portfolio. I actually bought them in 2023 when the market, in my opinion, overreacted very much about them hiring personnel or hiring employees for the long term and about short-term margin pressures. I also, I think the moat issue is still very difficult for me because it's hard to grasp their very high margins. And then if you could say it's skill, then maybe skill can be a competitive advantage. But I think it's not impossible to overtake Adyen, that's for sure. But it is very hard to do so. And so I think they have a lot of small advantages over competitors, but you might be right that there's not a real durable competitive advantage.
Yeah, and just to talk about skill, they have enormous skill, but that is not an advantage. They don't give that skill back to the customers. Like that is why they have such high margins. So that attracts, of course, other companies as well. They, like Stripe, they can jump into this opportunity, into this margin.
Yeah, but then I think they are doing so, but it's still, their margins are staying high like this.
I think if, for example, Stripe or a regional PSP or a local PSP, just for example, when here in the Netherlands or in Europe we have Molly, right? It's basically the same kind of product that Adyen offers, and I'm sure you have that in India as well, and I'm sure you have that in maybe this will come in America as well. And if they all offer a different strategy, like lower pricing than Adyen does, maybe shared skill advantages, I think Adyen has a very hard time to keep up with them.
Yeah, okay. They talk about local countries, so businesses that sell solely in the Netherlands or solely in India, but when it comes to global businesses, then I think it's almost impossible to compete with them.
Yeah, but like Amazon can have a local PSP in the Netherlands, a local PSP in India, a local PSP in America. So that is something that I'm not convinced about. It would be the payments team of Amazon has to hire more employees, but this could happen, and I'm a little bit worried for Adyen if it happens.
All right. For now, by the way, I do not do anything with my position. I'm comfortable with a little bit more than 5%. So I'm keeping it intact, and who knows when the market overreacts again. Let's see. At least I enjoyed your analysis, and I learned some new things about it, which I thank you for. And I hope the members also enjoyed this analysis as well as your written one.
I hope so. It was a lot of work, so I hope so, really.
All right.
But thank you, Mathijs, for being the host and providing us with some extra information. So great.
Yeah, happy to do so. So thanks again, Bouke, and thanks again to you if you have listened all the way to the end. See you next week.
Bye-bye.